Good old potential average yield. It comes down to expectancy and trying to understand what the personality is of the instrument you're trading. And this is a pretty decent example, but this is something I learned from my mentor, Jeff Crystal. And he talked to me just about the expectations of the market. And I actually learned a little bit of, I used to go take Jeff out drinking, Matt, to get him to teach me more stuff. I just buy him beer and let him spill his guts.
I've said for a very long time, the best way to get free education.
Oh yeah. So I actually, we have like cocktail napkins with charts on it and drawings of ranges and what a pullback is. So the idea of potential average yield, one of the first things he drew for me was basically a pullback. He said, look, no, here's a pullback. You got a pullback into a known support resistance zone, and you've got some possible forming support. You've got some known resistance. Those are the two price points that kind of frame the context of the setup. But you can also look at what the stock has done in the past. So you can say, okay, well, the previous move in this case went from 260 to 320. So that's the size of the move there. You can look at the previous move before that, went from 240 up towards 280. You can measure the size of that swing, and you can start to build in what would be a reasonable expectation based off past performance. Now, every time you hear that word past performance, the disclaimer kicks in my head. Past performance does not equal future performance. It does not guarantee future performance, but it is a good baseline of expectation. And if you look at how traders think about approaching the market, and this is something I actually picked up from Brett Charlesworth, of all people, Matt, who talked to me about stocks' personality traits. And the people who trade those stocks, they trade them over and over again, and they start to adopt the personality of the people who trade them. And as I learned more and more, I came more down to understanding what traders' expectations were. And if you can dial in what expectancy is, or what the expected potential move is, some traders look at that through options with things like implied volatility. Technicians like to look at the past price swings to help them identify, where that future price setup could go. So in this particular candidate, we got a pullback into a buy zone, into that upward trend zone, and we have a pretty well established personality where we can measure the past few swings. And I usually like to measure at least 3 or so of the past swings to get an idea of what expectations are, and what kind of movement we can realistically expect out of that stock. And there's a real simple tool you can use. It's just your trend line drawing tool, and you can measure the size of the swing. So I can start at the bottom, measure it up to the top, and you can read the data in that window, right? So that went 11 days, 9 candles, 9 bars. It went 55 cents in range. And that I can measure that range and go, okay, this thing moved 55 cents on that swing, and it took about 9 days. Here it moved about 45 cents over 7 days. So now I could average that out in my head. This is tough math. That would be 50 cents over 8 days would be the average, right? And if I were to go back and measure some of the previous cycles where I can look for clean support and resistance, well, that one moved 34 cents over 7 days. So that might bring my expectancy down a little bit. This swing here took a lot of time to develop. That almost turned into more of a position trade. It took 22 bars and 56 cents. So I'm starting to think, look, I'm going to get somewhere between 40 and 50 cents on this trade. And it builds in that expectation. So now that gives me a potential yield, a probable expectancy. I just called it potential yield for a lot of years. And then one day, Matt and I and Jeff Crystal, and I don't remember if anybody else was there, Matt, but we were sitting there in the training room with a whiteboard, and we were talking shop, and we were talking about potential yield. And little light bulb appears above Matt's head, and he says it's average yield. It's the potential average yield, because that gives you an acronym you can spell out that spells PA.
Well, that was the real philosophy behind it. I wanted to give it an acronym.
Oh yeah, I mean the fact that we got in that average word, gave us the PA. And so we have that potential average yield, and we literally built an entire trading system around that concept. If this is a swing trade, this is the expectation of the swing, and what the potential average yield could be, you now have an idea of how much that stock can pay. And at the time, Matt, I was working hard trying to replace all my income with swing trading, directional swing trading, which is different than cash flow trading. You have to be pretty spot on your timing, and you have to have good scanning capabilities. You have to be able to find good trend setups all the time. And you can trade it bullish or bearish, doesn't matter. But you do a little bit of arithmetic. You go and measure a few swing cycles. You do a little bit of arithmetic. You average it out, and you start to come up with an expectation. Hey, this thing I think is going to go about 45 cents, 45 to 50 cents, and it's going to take about 8 days. It would be my expectation if we were to get a textbook swing out of that. Now, that doesn't guarantee the outcome, but it gives me a reasonable expectation now where I can say, okay, well, if the probable yield's 45 to 50 cents, what's the most I should really risk to get into that trade? And if I could, put a buy above the candle and a stop loss below the candle, and I could risk, say, 10 cents or 20, maybe 15 cents, is it worth that 10 to 15 cent risk to see if I can get the remaining 30 some odd cents? That's kind of the way I look at it.
Yeah.
So you take a small amount of risk and an expectation of, twice as much reward out here based off of the potential average yield. And it's really, it's a concept that you can look at. Anytime I see a stock that has really clean swing cycles and really good technical setups, that's the stock I'm interested in swing trading directionally. And unless I see really clean swing cycles that I can measure, it's not something I'm usually interested in trading, because I need to have a good expectation of reward before I go take any risk.